Let's now talk about Prime Focus. The stock is under pressure right now. They've reported fourth quarter numbers. The stock is down 4.37% and the consolidated net loss came in at 80 crore rupees versus loss of about 20 crores in the same quarter a year ago. We have the management now joining us, Mr. Vikas Rathee, Group Chief Financial Officer at Prime Focus. Mr. Rathee, thank you very much for joining us here on NDTV Profit today. Can you take us through the key highlights of the fourth quarter?
Yes, thank you for having me. From a overall operating business perspective, we continued the improvement on the revenue and the operating EBITDA side. For the last 12 months, the revenues have now crossed 1,900 crores and EBITDA of about 325 crores. So there's definitely improvement from both sides. That momentum continues into next year. We, as part of the integration efforts, decided to shut down our Singapore operations, which was already planned, with most of the outsourcing work moving back into India, which generates the margins on the improvement side. That led to effectively all the loss that you see. There was a charge of one time for about 85 crores that's leading to the PAT loss you mentioned.
Right. Talking about EBITDA margins which have now come down to 17.8% versus 25% in the same quarter a year ago. What's the outlook now ahead as you say things are looking better ahead? What can we expect in FY17?
FY17, I think the last quarter of March of 15 was a little bit of an anomaly, and we had said that at that point in time. We had a bunch of really good projects coming in and work getting done at the same time. So, we had always guided that we will, come closer to 20%. I think 17% is on a 12-month year-on-year perspective is about 300 basis point improvement. FY17, we are looking at north of 20%. That's also what we've been guiding. So EBITDA margins will be 20+%, and we should continue to see our revenue grow between 15 and 20% for next year. So I think over the last 18 months, if you see, the revenues have actually close to doubled, and I think we are in the trajectory of 15-20% revenue growth for FY17 and EBITDA margins north of 20%.
Right. Talking about your debt, we believe you have been taking number of steps to reduce it. Can you share more details as to, firstly, where does the debt level stand right now and what's the outlook ahead?
Yes, the debt levels are slightly north of 1,200 crores. We actually sold one of our non-core real estate assets overseas for about 130 crores. That happened just at the end of March, so that's not fully reflective in the debt pay down stuff. So we have paid down debt by close to 100 crores in addition to what you already see as of March. We also announced earlier monetization of our stake in Digital Domain, and that's going to provide us around $50 million, which is about 300+ crores of marketable securities of a Hong Kong listed company. We will look to monetize that, and significant chunk of that also will go towards debt reduction. Given the improved operating performance we expect for FY17, we expect to bring our debt load down by 25-30% over the course of the next 4 quarters.
Right. And this monetization of stake in Digital Domain, how soon is that likely? Within the first quarter itself?
No, I think we used to have a stake in an unlisted subsidiary. We've now announced a transaction of getting shares in the listed company in Hong Kong. That will happen by, I would say, end of June, early July. And I think thereafter, there's obviously a process. We will look to see the right opportunity to monetize it. But for sure, this is going to happen during the course of our current fiscal 17.
Any other non-core asset that you are planning to get rid of in FY17?
No, I think we are kind of, our integration and realignment efforts are kind of now largely behind us. We've taken steps, like I said, closure of the Singapore facility, selling non-core assets. I think now it's blocking and tackling and making sure that we can, execute at the best possible margins on the revenues and the demand that we see, which is extremely strong.
Right. So the key projects we understand that you worked, in during this quarter included Captain America, Civil War, Batman versus Superman, Dawn of Justice. What is next? What lies ahead in FY17? The big projects that you will be working on?
There are actually quite a few. We are currently working on Star Trek, which the next series that's coming out. That's going to be, I think, a very, very big project that we're working on. The Mummy. Wonder Woman, we're also working on the next series in the Fast and Furious, which is Fast and Furious 8. Inferno, the next Jason Bourne movie, the next series after Harry Potter, which is called Fantastic Beasts. And there's just a very, very strong order book that we're working on, very high-profile projects. This is just on the Hollywood side. Again, the domestic market also continues to be very strong.
And with the strong order book, how much of a growth in your top line as well as bottom line can we expect in FY17?
As I said earlier, I think on the top line, we are looking for a 15% plus 15 to 20% growth on the top line. A big chunk of that is going to fall to the EBITDA line. So you're looking at EBITDA margin more than 20%. So that would actually mean EBITDA going up over what we have reported by 30 to 40%, if not higher, and that will yield positive PAT earnings for the next year.
All right, Mr. Rathee, thank you very much for joining us here on NDTV Profit and sharing with us the details about the quarter gone by and the outlook ahead for FY17. So they've got some big targets ahead lined up for FY17. Some flashes coming on your screen. Reliance Industries is planning to sell stake in Gulf Africa Petrol.